Imagine this, your holding company is in one country, your product team in another, you personally haven't spent 183 days anywhere in the last 2 years, and every new investor call starts with the same question. So where are you actually resident, and where does this structure really live? Your home country is tightening CFC rules. Your 0% tax playground is becoming unbankable. You're doing visa runs, explaining yourself to compliance teams, and hoping your accountant never has to explain this diagram to a tax inspector. At some point, every serious founder hits the same wall. Maybe I don't just need a good jurisdiction for my company. I need a normal, credible place to actually live and build. That's where Estonia quietly enters the picture, not as a postcard about old town streets and coffee shops, but as a real option to align 3 things: where you live, where your company lives, and where the numbers are simple enough that you can explain them on a whiteboard in 5 minutes. Welcome to Icon.Partners channel, and today we're going to talk about relocating to Estonia as a founder of a tech company, not just opening an OU online, not just getting e-Residency, actually moving your life and business center there, or deliberately deciding not to. Let's assume one thing. You've already seen or can watch our other video on how an Estonian company works. The classic topics there are the 0% corporate income tax on retained and reinvested profits, the 22% tax on distributed profits from 2025 onwards, the idea that dividends are generally taxed only once at company level, and the fully digital administration with e-Residency and EU VAT. Today, we're layering something on top of that. The real question is, what changes when the founder actually moves to Estonia? To answer that, we'll walk through 3 layers. First, migration and residence, how you can legally live there as a non-Estonian founder. Second, your personal tax position. What happens to your income once you become Estonian tax resident? And third, how this connects to your company and global structure, when relocation to Estonia actually solves problems and when it doesn't. Let's stay with the pain for a moment, because if we don't name it, the rest of the video is just tourism. A typical founder situation looks like this. Your company is already in a good jurisdiction, maybe Estonia, Delaware, Cyprus, the UAE, or something in between. You personally are drifting, a passport from one country, a tax number from another, and most of your time spent in a third. Your home country still sees you as tax resident or applies CFC rules to your foreign company. Banks, payment institutions, and investors keep asking for substance, board meetings, management, IP, and yes, the founder in one credible place. On top of that, Schengen 90 on 180 rules start to bite if you're non-EU. Remote-only life is getting harder because some major clients, banks, and regulators now quietly prefer EU-based decision makers. And your personal life wants stability, school for kids, healthcare, not living out of 2 suitcases forever. Relocating to Estonia is one of the ways to say, I want a single, boringly clear answer to the question, where do you live and pay tax? And I want that answer to be in the EU, in a place that understands tech. So let's see what moving to Estonia actually means, beyond Twitter threads and e-Residency ads. We have to clear this up early because so many founders mix these two. E-Residency is a government-issued digital ID that lets you sign documents, register and manage an Estonian company entirely online, and use Estonian e-services from anywhere in the world. It's a digital access card to the system. What it does not give you is the right to live in Estonia or the EU, Estonian tax residency, citizenship, or any kind of migration status. You can run a fully remote company with e-Residency and still be, for tax purposes, completely resident in your home country. When we talk about relocation, we're talking about something different. You need a visa or a residence permit that actually allows you to live in Estonia. You need to cross the 183-day threshold or establish your permanent home there. And you need to become an Estonian tax resident with worldwide income taxation in Estonia unless a tax treaty says otherwise. Only then have you really moved to Estonia in the legal and tax sense. Keep that distinction in mind as we go through the options. For EU and EEA citizens, the story is simple. You have freedom of movement, you register your right of residence locally, and you can become Estonian tax resident once you meet the usual tests. For non-EU tech founders, there are 3 paths that show up most often in practice. First, the startup visa and the founder residence route. Estonia has a dedicated startup visa regime for non-EU founders of innovative, scalable startups. The usual path looks like this. You apply to the Estonian Startup Committee to have your company or your idea recognized as a startup. They look at innovation, scalability, and your potential to contribute to the Estonian economy. Once you're approved, you receive a startup code. That code lets you apply for a long-term D visa to enter Estonia, and then apply for a temporary residence permit for business as a founder, typically for up to 5 years. During that time, you can live in Estonia, run your startup, and, subject to immigration rules, bring certain family members with you. If the business stays active and contributes to the economy, you can usually extend your status. After 5 years of continuous legal residence, you may be able to apply for permanent residence, provided you also meet language and integration requirements. This is the classic tech founder relocation track. Second, there is the digital nomad visa. Estonia introduced a digital nomad visa for people who work remotely via telecommunications technology. That includes people with a contract with a foreign company, founders of a business registered outside Estonia, or freelancers working mostly for foreign clients. There is a minimum income threshold, which is currently around €4,500 gross per month. This visa can allow you to stay and work remotely from Estonia for up to a year. For founders, it's a way to test drive living in Estonia without immediately committing to a full relocation of the business. But it does not automatically make you a tax resident unless you stay long enough or otherwise establish your main home in Estonia. And it is not by itself a direct path to long-term residence. Think of it more as, try Estonia on, then I've fully moved. Third, outside the dedicated startup regime, there are other business-based residence routes. Estonia offers temporary residence permits for business, including for founders who invest in and actively manage an Estonian company that contributes to the local economy. The specific requirements depend on the case, level of business activity, capital, jobs, and so on, and usually need a detailed review with a migration lawyer on the ground. The important takeaway here is simple. If you're a serious tech founder, there are established migration tracks that allow you to live in Estonia legally, not just be an e-resident. Once you become an Estonian tax resident, the center of gravity shifts from where is the company to where do you live. From 2025, Estonia has a flat 22% personal income tax rate on most types of income. That includes employment income, business income, and capital gains, with a basic tax-free allowance that gradually phases out as your income goes up. As a resident, you are taxed on your worldwide income unless a double tax treaty allocates taxing rights differently. On top of personal income tax, salary paid by an Estonian employer is subject to social tax at 33%, which is paid by the employer together with unemployment insurance contributions. For many founders, the most interesting part is how dividends from an Estonian company are treated once you live there. From 2025, dividends from an Estonian company are generally taxed only once, at the company level. The rate is 22 of 78 of the net distribution, which corresponds to 22% of the gross amount being paid out. As a rule, resident individuals do not pay additional personal income tax on these dividends because the tax has already been collected at the corporate level. There are some transitional nuances for profits that were previously taxed at a reduced 14% rate before 2025, but going forward, the idea is straightforward. Tax is triggered when profit is distributed, not when it is earned. That is very different from classic systems where the company pays corporate tax every year and you then pay a second tax on dividends personally. In Estonia, as a resident founder of an Estonian company, you are mostly choosing when to trigger tax by distributing profits rather than paying it automatically every year. At the same time, this does not mean Estonia ignores your foreign income. If you hold shares in non-Estonian companies, if you earn income abroad, or if you maintain complex structures in other jurisdictions, Estonia still wants to see the full picture. Double tax treaties will decide which country gets to tax which type of income, but Estonia will expect disclosure and coordination. This is where you need a joined-up view between Estonia and your previous life jurisdiction. So you've moved. What actually changes for your Estonian company and the structure around it? On the company side, the rules you may already know still apply. From 2025, Estonian corporate income tax on distributed profits is 22%, calculated on the classic Estonian cash flow principle, 0 while profits remain in the company, 22% when you distribute them as dividends or in certain profit-like payments. Estonia is part of the EU VAT system. From 1st July 2025, the standard VAT rate is 24%, with higher reduced rates than before on some services. Your Estonian company is inside that EU VAT framework. When that company pays dividends to you as a resident founder, those dividends are taxed once at the company level, and in the standard case, there is no extra personal tax on top of that, because Estonia treats the corporate tax as final. If your main operating company is already in Estonia, relocation allows you to synchronize the real world with the legal story. The place where strategic decisions are actually made, the place where key management lives, and the place where your main contracts and IP are anchored can all become the same, Estonia. That makes life much easier when you open or maintain bank accounts and relationships with electronic money institutions, when you raise capital from investors who prefer a coherent EU story, and when you answer substance questions from other tax authorities. If your main company is still elsewhere, a Delaware C Corp, a British limited company, a Cypriot holding, moving to Estonia changes the way Estonia sees the income you receive from those entities. Salary, dividends, capital gains, and so on. Whether that is optimal or not depends heavily on tax treaties and on your exit strategy. In Icon.Partners projects, Estonia tends to work best in a few scenarios. 1. Your product and your clients are already focused on the EU. If you're selling SaaS, development services, or platforms into the single market in Euro with an EU company and EU banking, it is simply easier when both the company and the founder are based in a stable EU member state. 2. You want to build real substance, not just paper presence. Estonia works very well if you are ready to have real management there, perhaps a small core team and board meetings and key IP decisions that genuinely take place in Estonia. 3. You value simple and predictable tax mechanics. A flat 22% personal income tax and a corporate system that only taxes distributed profits is not zero tax, but it is legible. It is easy to model and explain to investors, to tax advisors, and to regulators. 4. You want to align lifestyle with strategy. Estonia gives you full Schengen access, digital public services, and an established startup and VC ecosystem in Tallinn and Tartu. For many founders, that combination is more attractive than living in a classic tax haven where it is hard to hire, raise capital, or explain your structure. 5. You are prepared for EU-level compliance. Estonia is extremely digital and efficient, but you still have annual reporting for your company, real bookkeeping, and clear rules that distinguish salary, dividends, and business expenses. If that is your mindset, relocation can actually reduce complexity instead of adding more. Estonia is not a magic reset button. It's the wrong answer in several situations. If your old country doesn't let go easily, you have to be careful. Some jurisdictions have exit taxes, extended tax residence rules, or very aggressive CFC regimes. Simply moving to Estonia, even spending more than 183 days there, does not automatically stop them from taxing your foreign profits or applying look-through rules. If most of your income still comes from non-Estonian structures you don't plan to simplify, Estonia will happily tax worldwide income, but your administrative load may not shrink. 3 holding companies and 2 personal vehicles spread over multiple countries are still 3 holding companies and 2 vehicles, just with Estonia added to the picture. If you don't actually want to live there, that's another red flag. It may sound obvious, but it matters. If you're not planning to spend real time in Estonia to learn at least some basics of the language and to integrate into the ecosystem, immigration and tax authorities will eventually notice the gap between your story and your reality. And if you're looking for no questions asked banking, Estonia will disappoint you. Estonian banks and EMIs are tech-friendly, but they are also highly compliance-driven. They expect clear business models, proper KYC, and increasingly sensible personal and corporate tax positions. So before you buy tickets, you need a two-country view, what Estonia offers and what your current jurisdiction will do when you leave. We map your situation across 3 layers: migration, personal tax and company structure, both in Estonia and in your other jurisdictions. Here at Icon.Partners, we coordinate with Estonian migration, tax and accounting partners to choose the right residence route, whether that's a startup visa, a business permit or something else, to align your personal tax residency with the company's reality, and to design a mix of salary, dividends and other payments that is defensible and predictable under Estonian law. And if Estonia turns out not to be the best fit, we help you compare it with the alternatives you are considering. For example, Cyprus, combinations like Estonia plus Delaware, or lots of various EU options. If you're a founder thinking, I'm done with patchwork residency, I want one clear story that works for my life, my company, and my next funding round, then Estonia might deserve more than just a spare blink in your research. If you'd like to explore whether moving to Estonia makes sense in your specific situation, you'll find our contact details in the description. Thanks for watching, and see you in the next episode.